Good morning, everybody. Welcome to OP Radio. In case this is your first time here, this is a weekly show that we host every Wednesday at 3 p.m. UTC on anything and everything related to the Optimism ecosystem. So, thank you for joining us once again today. And we've got another great episode lined up for you. We have one of the OG OP protocols here with us today, some members from the Synthetix DAO. So I'm really excited and looking forward to some big news they have to share. But before we let them introduce themselves, I would like to allow my colleague, the DeFi DeGeneral, Mr. Smith himself, to introduce himself. Hey, Smith, how you doing?
Doing well. Yeah, thanks, Mac. Yeah, I'm Smith. I lead the DeFi team at Optimism. Little known fact that I guess maybe even Matt and Afif aren't aware of, but I used to work at a market making firm, traded on-chain or off-chain derivatives, specifically for the perpetual space on the top exchanges at the time, so BitMEX, Finex, and whatnot. So this is a really interesting protocol to me. I've been following it since even before Optimism. So I'm really excited to be talking to these guys today.
Me as well. And for folks listening, my name is Mac, by the way. I'm the host of OP Radio, but Smith is really going to be leading and guiding this conversation because he is definitely the subject matter expert on all things DeFi. So without further ado, I'm going to allow our guests today to introduce themselves.
Awesome. Yeah, I can go first. Thanks for having us here. I'm excited to chat with you guys today. So I'm Afif. I'm a contributor with the Synthetix protocol, mostly focused on kind of like product and mechanism design type stuff. That's probably enough of an intro. I'll let Matt give his intro now.
Yep. Awesome. Happy to be here as well. It's always nice chatting with the Optimism folks, especially on Twitter Spaces. Yeah, I'm Matt. I'm also a core contributor at Synthetix, handle comms marketing, and I help out a little bit on the partnership side as well. Yeah, that should be a good enough intro on my side too.
Awesome. Thanks for that, guys. So let's start out with really broad strokes. I'm just going to tee this up, and then I think Smith's going to take over for the most part. What is Synthetix?
So what is Synthetix? So it's like that question itself. You could have a really long answer because Synthetix is kind of like one of the handful of like prehistoric, I would say, DeFi protocols, right? Like has contracts that were written before there was really any standard way of writing these sorts of things. Staking rewards.sol is like the most forked contract in DeFi. But unlike some of the other like prehistoric DeFi protocols, like Synthetix has changed a lot from what it was at the beginning, right? Like, so kind of like some of the really, really old DeFi protocols, you have like MakerDAO or even Aave before it was after it was Ethlend. Like they kind of are still in the same more or less space, but Synthetix has really pivoted a lot, through this kind of like last 5 years or so. So initially, payments protocol pivoted to synthetic assets, and then now kind of just gradually, I would say, generalizing more and more over time, right? So like different fiat pegged stablecoins is a form of synthetic assets, but then later in 2018, 2019, it kind of moved from when it was called Haven, when it was just doing fiat pegged stablecoins, to Synthetix, which is generalized synthetic assets. And then it's further kind of generalized from there now. And then as we move towards V3, of kind of just being a generalized like protocol for any type of derivative contract or instrument on chain. So I would say that's probably the most succinct way to describe it. And then I expect during this call, we'll kind of get into some of the like specific ways it tries to achieve that in more detail.
Very nice. Matt, is there anything you'd like to add on to that?
No, I think Afif does a very good job explaining the what is Synthetix question. It definitely is a very complex one. People that have been around Synthetix for a while have definitely seen that transition unfold before their eyes. Yeah, especially as people have seen a transition from this like initial stablecoin protocol as Haven, then you see it be like a front end facing protocol for synth exchangers, and now as Afif said, you've entered this more generalized liquidity provisioning tool.
Cool. And yeah, just to jump in here, I wanted to let the audience know a bit more about maybe what you guys have been focusing on so far. I know we date back to the Haven days, and there's a lot of history when it comes to Synthetix, but what kind of assets do you guys focus on these days? Oh yeah, let's just go through that very basically first. And then I'd like to even learn a little bit about how the protocol works more on like, I guess we'll keep it as digestible as possible. But yeah, let's just go through like the basics of what Synthetix today offers to users, and then we can go into how the protocol itself works, maybe on a little bit of a light technical level.
Yeah, sure. So, like, I would say probably in terms of popularity right now of what Synthetix offers, it seems like the perpetual futures product, it seems to be the one that users like the most. There's like a few others. There's like spot synths that don't have leverage and are more, transportable, composable. You can carry them around in different wallets. And then there's loans and other types of synthetic instruments. But yeah, I would say perpetual futures is the most popular. And then within that segment, like crypto assets are by far the most used, right? It seems like that's what there's the most demand for, and that's what the users really want the most.
Yeah, no, and I think we'll get into perpetual futures in a second as well. So why don't we go a little bit into the protocols? So I know there's like this entire black box of they're staking to collateralize the network. You can provide unlimited liquidity for trading, all this kind of stuff. But what's actually going on underneath the hood so that people can feel comfortable with, okay, my money is safe or things are going okay? Because there's always like a bad debt problem in crypto and DeFi in general. So walk us through how people are protected in the synthetic system.
Yeah, so that's a really good question for how like somebody who is staking SNX is connected to somebody who's trading with a perpetual futures contract, right? So kind of the way we look at it is that like the perpetual futures markets, you can kind of look at them as like as their own entity. And basically like they're accepting SUSD, which is Synthetix's, native USD stablecoin, and they basically just accept and emit SUSD. And they have some logic inside them and some data structure that keeps track of, positions and leverage and funding and make sure, accounts are liquidated and all that sort of stuff. But so the perpetual futures markets are just a data structure that accepts and emits SUSD. And if they, on balance, are accepting more SUSD than they're emitting, then they're basically, you could say that those markets are profitable. But then what happens to that profit? Or, in the other case, if they're emitting more than they're accepting, it's a loss. It's basically tacked on to the debt positions of people who stake SNX. So that's like another whole kind of like calculation to think about. When you stake SNX, you basically borrow some SUSD at like a really conservative collateralization ratio, and then basically your debt, the amount of debt that you owe that you have to pay back your position, fluctuates with the performance of these other markets that are basically adding and subtracting to your debt. And for perps in all of last year, like they were very much subtractive for people's debt. So everybody's debt was going down over time as a result of the existence of these perpetual futures markets.
Yeah, no, really well said. I think there's a lot of information here, and I'd love for people to go and check out like the details when they're free if they would like to go deeper into this, because there's a lot here. So yeah, thank you for giving like a brief overview of what that was.
Yeah, I think just a
Go
quick
ahead,
one,
Matt.
Smith. Just while these things are kind of confusing when you think about them at like a system wide level, the staker experience that we've, well, at least like the Synthetix community and Synthetix has tried to build, has made that a lot easier through like one click hedging tools and things like that, to where you don't have to worry about the day-to-day fluctuations of your debt, and instead we've worked with folks like DHedge and Toros Finance and such to like automate that process, so someone can just stake, take their SUSD, have it automatically hedged based on perpetual future market performance and spot synths and all the other products, and they can reap the benefits of staking outside of this more complex side of Synthetix. So yeah, just want to hop in with that so people know that it's that you're not having to constantly monitor all these fluctuations by yourself.
100%. Yeah. I think this is like the best way to introduce people to Synthetix as a protocol, because derivatives on chain are very different than derivatives off chain, right? So having these tools so that people don't have to worry about it, abstracting away all these little details, a very necessary thing to do in this space. I think I've been managing like my SNX staking position for like over like a couple of years now, and I've never used any of like the extra tools like DHedge and whatnot because I'm very active with it, but many people would like a lot of that to be abstracted away. So yeah, thanks for going through that, Matt. I want to change gears a little bit and talk about Synthetix and how it differs from other protocols. you can take it in any direction that you want of what you think the similar protocols to Synthetix are. But I'm curious what you think on the biggest differentiators. Is it the type of assets that you can kind of allow on your platform? Maybe like speed, is it fees? Like, what would you say is the biggest difference between Synthetix and other platforms around that area?
Yeah, I mean, I can kind of take the initial part of this, but I always think that the goals of Synthetix and what it's attempting to do through this like liquidity provisioning and allowing like many products to be supported on top of this debt pool model is very different from any one particular protocol that people can think of, right? People may look at, you could think of like a DYDX or, perp or GMX, or maybe in the early days, you can go to something like an UMA, right? From like a very long time ago. But really, none of these are really the right comparison, because these protocols focus on, one sort of derivative, or like, one sort of financial product. Where at Synthetix is this like back end infrastructure provider for liquidity and liquidity provisioning that products are built on top of. You can really start to look at that by the way of looking at the products that are built on Synthetix. So if you look at something, I'm just going to start naming out the protocols, but you can look towards something like Quenta that integrates with synth assets for spot trading. And then it also integrates with perpetual futures for perps trading. Decentrix is another perps trading front end as well. You have someone like Lyra who integrates with spot assets to allow for options trading to occur. And then Polynomial supports option vaults and things of that nature. I think the key differentiator between Synthetix and any of these protocols, if you had to compare them, is this like pooled collateral model. So instead of, having to focus on, liquidity generation for, one of these products, Synthetix just has this like one, large liquidity pool that, all these different products can tap into, at low fees and, very deep liquidity. And this generalized approach really helps when spinning up new products, because you're not constantly focused on, generating large amounts of liquidity for one pair, or doing, some sort of liquidity mining for, one new product. Instead, you get to focus on, helping to build these products with some of the integrators and so on. And you already have this big liquidity pot that people can play with. But if a thief wants to hop in with anything, go for it.
Yeah, I was going to say, if you wanted to add anything there, maybe you can even add details on, like, Matt lightly touched upon it, but the type of assets that you can trade on Synthetix. I know that like there's a blanket statement on like you can kind of trade anything, right? That has an oracle. But yeah, I guess like that pooled liquidity model really makes that possible. But yeah, if you have any extra thoughts there, Thief, feel free to jump in. But otherwise, we can move on to like the next question.
Yeah, I mean, I think Matt covered it pretty well. I mean, I think like one interesting thing about Synthetix, like Kane used to say this all the time, like way back in the day, like when Synthetix was still relatively new, of like he had these analogies of like, Synthetix is like protocol X, Y, and Z kind of mashed up into one, right? And when you look at Synthetix right now, like even now, that's even more true than like kind of that it's ever been, right? Like you have like the actual SUSD issuance mechanism, which is kind of like DAI. You can take it alone against ETH and SUSD. So it's kind of, it has some components of Maker, right? But then you go over and there's like this perps protocol, right? So it's similar to other perps protocols that have been tried, right? Like maybe like GMX or Perpetual Protocol, one of the million perps protocols on chain, right? But then we also have ways, to collateralize the stablecoin with, with different derivatives or structured products, right? Like if you tokenize a basis trade, right? Spot ETH and perp ETH short. And so it's kind of like UXD and some of those other protocols that have tried that. So I would just say like it's a super versatile protocol, like in terms of like all of the different things that can be done and combined in different ways, and it all centers around that staking mechanism that Matt was just describing, where you could basically like from the staking and LP side, you can construct any kind of exposure profile that you want in terms of combinations of different things. That's where it's moving, obviously. And from the trader side, like you said, anything with an oracle, and kind of we'll get into V3 later, but the kind of spirit that like is being fostered with V3 is like supporting experimentation as much as possible. So maybe not even necessarily just, like vanilla, like plug in X access price feed, and have a synth that tracks it, but maybe even other things like maybe you want to construct some other payoff structure or some other type of exotic option or something like that. And we can get into all of that later. But yeah, I think Matt said it pretty well.
100%. Cool. And Matt, you touched lightly upon the protocols that integrate Synthetix. So can one of you guys walk me through what is an integration with Synthetix first look like, right? So we're not talking about like, hey, let's create a curve pool with SUSD necessarily. We're talking about more of like a deeper integration. So maybe you can go lightly on what kind of protocols are already integrated on top of Synthetix and what it really means and how it works with the system.
Yeah, totally happy to do it. I think just to like a broad statement to before we even start, I think an integration means different things to different integration partners and like how deep it goes, right? So we can probably explore that through like the protocols that have integrated in some way. So for someone like Quenta, right? Quenta integrates with synthetic assets like spot synths to allow people to trade spot SBTC to SETH with a set fee, and like that would be what that works like, what that is, and then they actually integrate with the Synthetix like exchange contracts on the back end, right? Because Synthetix has all this all these contracts and things already done in the background. And then they also have a perps trading interface where, yet again, as Afif was kind of explaining, like, how perps works and, how the data structures and, and so on and how all this is tracked. That's all done through Synthetix contracts. So, anyone is able to go and, build a perpetual futures, trading front end that just relies on the Synthetix contracts in the background. Decentrix does something very similar. They're also a perpetual futures trading front end as well. Yet again, tying into the the Synthetix contracts in the back end, coordinating with some of the CCs on the specifics of what that looks like. And yeah, I mean this same sort of integration is like true for most of the products. I guess it depends on like the way that the protocol integrates. For someone like Lyra, for options, they tie directly into spot synths to do so. But I know in the future they plan to hedge their options trading with perpetual futures because of the capital efficiency side of things. And Polynomial ties into Lyra to then enable like these sort of like structured options and these like automated vaults to occur. So if you wanted to like automate covered calls being sold all the time, Polynomial could do that. But what is very interesting is that someone like Polynomial or someone like Lyra and so on could always come and build a new product, which is something that is expected from the Lyra side, or rather from like Polynomial side, where they may build basis trading vaults on top of Synthetix perps as well. Now that is more of an explainer of like what protocols build on top of Synthetix, but the actual ability to build on Synthetix isn't gated by anyone or governance or anything along those lines. If you just build a front end that ties into Synthetix contracts, fully open source, fully on chain, you can go and do that, and there's nothing that like that product would just exist into the world, and it would just tie into Synthetix liquidity in some way. There are incentives for developers, and there are definitely like programs that have been set up to like reward the volume generation. But at its core, there's like no gatekeepers or anything to that side of things. But Afif, do you have anything on the integration side that you want to touch on?
I think you got them all pretty well.
Awesome.
I just want to interject real quick because I think what I'm hearing, and this is a very powerful, what this opens up a lot of doors. What I'm hearing is that Synthetix is basically providing the DeFi plumbing and infrastructure that anybody can then come in and build on top of, whether that be with options or perpetual futures or what have you.
Yeah, that's exactly right.
Yeah, that's exactly right. And it's true now, like how the system works in, like where Synthetix is at right now. And we'll talk about it, more as V3 comes up later on in the call, but it becomes even more true and even easier to interact with this, like, dirty plumbing that Synthetix helps to handle for you. So yeah, 100%. It's a great way of looking at it.
Very well said, guys. I wanted to switch gears a little bit. So we talked a bit about the history of Synthetix, how the protocol works, the mechanism, and even the details of the integrations. But maybe in like your guys' own words, in simple terms, what would you say the long-term goal for Synthetix is? It could be something very simple, but yeah, what do you guys think the long-term goal for Synthetix is, dating back to maybe when you guys started?
Yeah, I would say like the long term goal is kind of so the current version of Synthetix is called V2. It's the number is not important, but basically in V2, we've kind of like the protocol has shown like the different types of things you could do, you know, with synthetic assets and on-chain derivatives that are useful. But it's kind of in a relatively constrained design space. And so the goal of V3, which I think is very much in line with the long-term goals of the protocol, is to create something that is like a very effective and safe permissionless, you know, space for experimentation within the, you know, within this vertical of like DeFi derivatives, and then use that to kind of grow a community around it of people who want to come and experiment with these things, and people who want to try, you know, new products developed by other people, all in like a purely permissionless and, you know, decentralized way. So I would say that's probably like the main goal. Like short term goal is like build V3, test it, grow it, expand it, showcase what it can do, and then hopefully, you know, long term that kind of grows the community even more, and you have more and more people who want to come in and try new things, and like it kind of, you know, flywheels from there. But Matt also probably has some pretty good takes on that also.
Yeah, no, I think Afif explains it really well. I always like to say when I'm answering questions like this, I think the biggest thing that we always like to keep in mind is that, you know, because Synthetix is so decentralized in the community, and, you know, the governance structures that have been set up like decide on the direct goals and like what is actually being iterated on and all that, that like even as CCs, like even as Afif explains those goals, like yeah, the community rallies behind them and the Spartan Council has voted on them, but you know, the details of how you get to those goals can always shift through governance, right? Like governance can always vote to, you know, do X, Y, or Z. You see that when when you're building out the actual like, you know, perpetual futures side of the protocol, and the, you know, the Spartan Council kind of debating, you know, particular things about the mechanism and so on. But yeah, to the actual like what is the long term goal, I totally echo the things that, you know, Afif says. You know, it's definitely, you know, short term you've got, you know, promoting perpetual futures as an offering as of right now, and then there's, you know, helping to promote the ecosystem of projects that have currently built on Synthetix. But you know, as V3 releases, you know, that becomes even more so important, because you know, you're going to have many protocols building on top of, you know, Synthetix liquidity, and using the infrastructure that, you know, Synthetix has spent years iterating on to build. So yeah, totally echo the things that Afif has said.
Yeah, no, I love that actually. Like when I think about Synthetix, I think about, hey, let's create a platform that can allow pretty much users to trade any synthetic assets that track the value of real world assets, right? So it's really like changed in the form of like, because of decentralization, it's really the community that governs the direction and the vision almost of the protocol. So I love that answer a lot. Switching gears a little bit, I wanted to talk about optimism and layer two as the choice of the current future of like Synthetix. You guys originated from Ethereum L1, and you guys were pretty much solidified as one of like, I guess like what people would call DeFi money Legos or blue chips, whatever you want to call it. Talk to me a little bit about the decision to move towards layer two, and what motivated it and why you guys did it.
Yeah, I mean, I would say that the biggest thing about moving, you know, to Optimism and, you know, layer twos as a whole is that, you know, being on Ethereum layer one, especially during the days of like super high gas fees and, you know, so on and so forth, it just makes the protocol of Synthetix just like, you know, not really usable for day-to-day people. Like, and that's even saying that within the structure of what Synthetix was when it was still on Ethereum L1. Because when Synthetix was on Ethereum L1, it was really just a spot exchanging protocol. And you had stakers, you know, that would receive the, you know, the fees and inflation at that time. But, you know, there wasn't even the possibility for Synthetix to support the products that it does now on, on Ethereum L2 with this like, super low gas fees and this like pretty much instant execution. There's no way that you would be able to support perpetual futures trading, options trading, options vaults, and all these different things that are being built on top of Synthetix. You just can't do that on L1. The fees are too high. You just can't properly pull the data as quickly as you need it to support these like high frequency financial products. And really the decision is like heavily rooted in the fact that moving to these L2s is like really important for Synthetix, and it really helps it build out its ecosystem and properly build on this vision of Synthetix v3 and supporting many protocols and being this liquidity provisioning tool. And obviously I think the big one from myself and shared with many members of the Synthetix community is that Optimism has these like long-term goals to like be very decentralized, and their governance structures are empowered, and these things are very near and dear to to Synthetix and its community as well. So these like these plans to build scaling solutions on Ethereum is important. These are sort of the feelings that a lot of the folks within the Synthetix community also share. But I think that could be thought of as like a secondary thing to like building the product, and then you still want to be on this very decentralized layer 2 scaling solution as well.
100%. And many people may not actually know this, but Synthetix was actually one of the, I would even say like the original partners of Optimism, right? Like we almost started and catered some of our design to make sure that the Synthetix protocol worked. We worked very closely to the team. Kevin Ho, one of the original members of Optimism, used to always say that he'd stay up till like 5 a.m. working with Clem from the Synthetix team to make sure that this product worked perfectly on layer 2. So yeah, there's been a lot of history between the two parties. So I'm glad to see that you guys are launching such huge upgrades now. So
Brief personal anecdote: Synthetix was actually the reason I first tried Optimism. I remember when Synthetix moved to Optimism, and I think that's the case for a lot of people.
exactly. Yeah, no, Synthetix is pretty much the day one for most Optimism folks.
Yeah, just to go even further, like I think the onboarding experience to a layer 2 and especially Optimism is so much better than to onboarding users directly onto Ethereum L1, right? If you tell a user that they have to pay these like at the time, because it's a long time ago that gas fees were like super expensive, but if you had to tell users like, hey, if you want to do anything within the Synthetix ecosystem, you're going to pay potentially an arm and a leg. It's very difficult to onboard, regular everyday users who want exposure to DeFi, but aren't going to spend, let's just say 10%, 20% of their trade just in gas fees. And Optimism really helps with that onboarding experience, both in users, developers, and and so on. Like there's so many avenues that are fantastic with the Optimism side of things.
Awesome. And now we're going to get into the large update. I guess this is sort of like why we're all here today as well, with the perps v2 release. So we'll go into the details of what like perps v2 means. Perps v2 obviously means that there's a perps v1. So we'll talk about the history with v1 as well versus v2. But maybe just really quickly, could you talk about what are perpetual futures and what do traders use them for today?
Yeah, so perpetual futures, I guess, are something that are like a flavor of some TradFi instruments that were kind of popularized in a more crypto native way, BitMEX back in the day. And essentially what a perpetual future or perp is that it's a way of like kind of like creating these synthetic, assets that can be loaned or shorted, right? So normally, like if you want to short something, people go and do margin trading, right? So if I want to short ETH, I go and I borrow ETH, and then I sell it on the market, and then if it goes down, I buy it back for a lower price and return the ETH that I borrowed, right? But what perps do is they basically kind of just recreate this process, but they allow people to kind of create fake tokens or assets that can be, they're synthetic, that can be loaned and sold by another person on the other side of the trade, basically, right? And I think they've been popular. They've been so popular in crypto mostly because of like the simplicity, like and the consolidation of liquidity that they let you have. And I know that's like kind of a little bit wordy, but basically it's like, with traditional futures, you have a bunch of expiries all the time and you always have to roll. And in crypto, like there's not necessarily a need to trade specific expiries, right? There's not necessarily like, there's no earnings reports. Because kind of crypto has always kind of existed in this silo of, away from the rest of the world where you really just want a perpetual instrument to trade all the time. And then all the liquidity basically is consolidated into that one instrument. So I think that's why they've become so popular. And then obviously like, with leverage, you could run really highly capital efficient strategies or, different hedges or whatever. And I think that's part of the utility that comes from perps for traders and market makers and stuff.
What would you
Very
say is
well.
the main benefit
Go ahead.
of futures? Like, why would people choose to trade futures instead of, say, spot?
I mean, I think for like, there's the like, so first there's the obvious retail, like speculation, right? But like, that's not necessarily like I would say a powerful use case. I think the most powerful use case usually comes from hedging and certain, risk management strategies. And it's kind of just like a more capital efficient way to pass risk from one person to another, right? Like, so traditional, like, really, many centuries ago, futures is basically just like, I'm a commodities producer and I want to lock in my sale price. So I sign a contract for you to buy it at, some specific price at some date in the future after I've had my harvest or whatever, right? So that's traditionally what they're for. And then you add speculators and liquidity providers into the market that make it a more functioning, liquid market. So they're speculating on where the price will go in the future. And this kind of ultimately it still benefits, the primary end user, I would say, which is the producer of the commodity. But like, so that's traditionally what they're for. In crypto, they still have that same use case, right? Like, for instance, like somebody who is staking ETH on, who has been staking since the beacon chain or something. If at some point they're like, okay, I can't take this directional price risk anymore, but I don't have my ETH, like you could take some cash and you could collateralize a perps position to kind of manage your risk a little bit, right? Or if you're like a liquidity provider or a market maker who's taken on a large position as a result of, some trade flow, like you could use the perpetual futures market to kind of, to offset your exposure. So a lot of so I think a lot of like the really powerful use cases are centered around risk management, I would say.
Yeah, and I think like for me, what a helpful example was my direct manager used to always say that like perpetual futures are just futures contracts that don't have expiry, right? You can trade quarterlies in crypto if you really wanted to, and it's just extremely simple, right? To be able to long and short and not have to worry about, hey, like, is the price going to make sense? There's like these complicated mechanisms usually when you're trading options and other types of derivatives. So yeah, the simplicity has really taken off, and the volume that perps just funnel in crypto in general, like it's basically been so dominant for such a long time now. So yeah, no, I love the mechanism in general. I wanted to talk about perps v2 now and what it will change for the perps space. So walk us through what perps v2 is first, maybe how it differs from the v1. Yeah, what do you think it'll bring to Synthetix and maybe just like the space in general?
Sure. Yeah. So V1 actually has some history that dates back quite a while. I think at the first time I read about, the what we call perps V1 now was like, it was a while ago. It was when there weren't really any on-chain perps protocols, and like Synthetix was aiming, trying to be one of the first. This was before I was even a contributor with the protocol, just a fan at the time. But it was kind of the first protocol that would say like, let's use this different model to make an instrument that's really similar to perpetual futures, but in a different way that works on chain. So what does that mean? So normally, like if you trade perps, there's this thing that like is basically exchange between traders called the funding rate, and this is just basic background for any users who aren't familiar. And the core like function of what funding rates are for is they basically enforce alignment of the perps market price and the spot market price, right? So if the perps market is trading at a massive premium, then traders on one side, on the long side, they have to make a payment to traders on the short side. So basically what that does is it makes sure that the perps market price is aligned to the spot market price all the time. But with Synthetix, like historically going all the way back to the early days, like exchanges are always happening at a fixed price at the Oracle price, which is the spot market price. So exchanges are already happening at the spot market price by default. It's enforced by the contract and the Oracle and Chainlink and whatever. So what does the funding rate do in Synthetix perps? It's a risk management tool for the people who are backing these markets. So I don't know if this was the first, but it was the first time I read it. I think there was other protocols doing it at the time, but Synthetix was like very early on this idea of like, let's have a skew funding rate instead of like a price premium funding rate because we're doing these exchanges at an Oracle price. I'm sure there was probably others doing it at the same time. But that's basically what V1 was. It was, let's allow an exchange of any size at an Oracle price, and then let's have this funding rate that's kind of proportional to the imbalance in the market. So if there's more longs than shorts, longs pay shorts, and if there's more shorts than longs, shorts pay longs. Let's have this skew-based funding rate to kind of manage risk for the people who kind of have the exposure to this market, right? Because if there's more longs than shorts, right, then the longs are earning profit basically if they make profit from the people who are backing the market. So the staker is basically always at the counterparty to the difference between the longs and shorts. When longs and shorts are totally balanced, then the stakers don't have any risk because the profit on one side comes from the loss of the other. So that's basically V1. And then did you want me to jump into like what V2 kind of brings and what problems it's trying to solve from the V1 kind of phase?
Yeah, exactly. And I guess like just so that the listeners understand, when we talk about like the counterparty backing the protocol and whatnot, and like where the funding goes and all this kind of stuff, everything once again revolves around that dead pool, right? Because DeFi is very different than centralized exchanges and how they operate their liquidity. So it's really interesting, like how this all came together and became like a really fluid place to trade derivatives or any asset in the space that tracks spot prices, right? So yeah, I just wanted to quickly mention that. Why don't you go into like perps V2 as well, so that we can understand like what kind of large upgrades came out of it? Like why is it so much better than like what perps V1 offered?
Sure. Yeah. So I would say that like a good way to think of a good mental model for these is that like I mentioned before, like the contract just has some logic and then it passes basically the risk onto users who are exposed to like what that contract does. And so I would say perps v2 like has kind of like two main themes around risk management that basically make the contract able to offer positions in a much more efficient and safe way. And so like because it's much less risky, it can be scaled up a lot more. So it's much more capital efficient for stakers, right? So if you could have the same amount of collateral backing the contract, but in V2 it can support 10 or 50 times more open interest, it's going to generate a lot more fees and revenue for the people who are backing it. So it's a much more attractive thing to back. And then there's some other changes that are kind of just really centered around user experience. And I think like the user experience in V2 is also going to be like orders of magnitude better than V1. So just jumping into what those are at a high level. The first on the user experience side is just kind of we've kind of rethought how we think about using oracles for this specific application. So historically, Synthetix has always been, there's an oracle price. I come to trade. The contract says, here's a trade. It's at the oracle price, and then you leave. The issue with that is like it can't be done instantaneously, and a trader will always have a latency edge over an oracle. And because traders will always have that advantage, like it's not really practical for the LPs on the other side who have to take the side. So you really select kind of for this, there's this adverse selection for traders who are always making money at the LP's expense. And historically, the way that Synthetix has solved this problem and the way it is on L1 is that there's basically a delay between the time you start the trade and the time you actually settle the trade that kind of is meant to offset the latency of whatever your price source is, right? So on L1, like it can be pretty long, right? Because gas markets can get pretty congested, and it can be difficult to get a fresh price on chain. And even then, sometimes like if the price is moving really fast, you need several price updates, right? So the settlement time on L1 is 6 minutes. So it's pretty long, right? Because so this is another reason why layer 2, right? Because a lot of these things just aren't really practical on the Ethereum L1, and that's why there aren't really any perpetual futures protocols on the Ethereum L1. So anyway, so the way that we're approaching this now with perps v2 is to basically have these oracles that are pushing prices off chain continuously. And when you push them off chain, you could push very high, high resolution, quick, granular price updates, can be like on the order of every second. And then basically when the user wants to trade, they just pull this data from off chain and it's signed by all of the, all of the nodes, same way it would be on chain, and it has a timestamp. And then they just pass it to a contract on chain that checks that, this is a fresh price, or it's, within the accepted time window, and it has all the relevant signatures, it's valid, this isn't a fake price update. And so boom, you get the trade, right? So what this does is it lets you basically trade with like very, very high accuracy, low latency oracles. And what this translates to for users is better user experience and low fees. So I would say that's probably the biggest UX difference from V1 to V2. And it does, doesn't rely on any centralized infrastructure, which is like a, core moral, like in the Synthetix community. And then in terms of risk management, there's two new things. One is basically just like a way of kind of like simulating what an order book would do in terms of price impact, or like, an AMM. So like you basically are fading large orders where a large order will, move the price relative to the Oracle price by some amount. And there's a lot of like kind of tedious math about why that works, but it's basically just this curve and you're moving the price along some premium or discount relative to the Oracle. And this basically is like a way of leaning against, Oracle manipulation attacks that we've seen on other protocols as well as with Synthetix in the past. The first one was with, I think, S Maker back in 2019. That was the first time I saw it. Somebody was basically longing and then pushing the price of Maker and then selling and then doing it rinse and repeat, right? So that kind of leans against that sort of thing. And then the other thing, which is probably like the least well understood, but like, and we're still even trying to figure out like the things that we could do with the result of it, is basically this sort of different funding rate model that is basically like a Dutch auction for positions. That is probably like maybe an interesting way to think about it. Whereas in V1, you basically have a funding rate. So if somebody takes like a position of X size, the funding rate is always going to be proportional to X, and then it just doesn't change. In V2, basically, if somebody takes that same position, the protocol basically starts auctioning off that position. Not auctioning it off, but auctioning it off by raising the funding rate. So it raises the funding rate higher and higher and higher and higher until you have somebody who comes in and basically takes the other side. So and I'm thinking about it a little bit more recently. I kind of started thinking like this kind of is like a Dutch auction for funding rates, where you're kind of just stepping the funding rate progressively higher or lower, depending on the direction of the trade, until you are able to, incentivize another position to take the other side. And it may not seem particularly powerful on its own when you think about, simple markets like, like ETH or BTC perps or something. But I think where you might actually start to notice all the interesting things it could do is where you have more exotic markets down the line, which, might require a more kind of creative funding rate model that doesn't pass any risk on to the liquidity providers. So I know that was really long-winded, but that's kind of like, that's the gist of why perps v2 I think will be pretty useful.
No, yeah, I think that was great. There's a lot of information here once again. So maybe at the end we'll give details on where they can find details or like more information on it. So don't worry about it too much today. I wanted to quickly flag that there are two front ends or protocols that you can utilize today to harness the power of perps v2. So it's Quenta and Decentrix. Definitely go check them out. Decentrix, a bit of a newer protocol that's released recently. But yes, we will shout out some information so that people can understand the full scope of V2 versus V1 and what the large changes were. Cool. Matt, do you have anything extra to say on this end?
Yeah, I was just going to add something very quick. If you guys want to learn a little bit more about perps v2 and to see some graphical explainers of kind of what Afif is saying, Optimism pinned a tweet that you should see right in the Twitter Space window as well, so you can kind of take a look at a little bit of a easy to digest explainer about perps v2, and then you can go a little bit deeper on the blog post and join the Discord and chat about it as well.
Perfect. Yeah, definitely go check that out. Sweet. I wanted to move to the next large upgrade that's kind of happening soon. Synthetix v3, right? So people call this like the WordPress of derivatives, but I guess it's a little bit tough to grasp. Maybe like things that are very general or modular are always kind of tough to grasp in your mind without examples. So walk us through what Synthetix v3 is roughly, kind of what it does, right? Like we talk about like modular open source code, but yeah, what would you say Synthetix v3 is in a nutshell?
Yeah, I would say that, like, in a nutshell, I would take everything that I've explained about how V2 works right now and modularize it. So I know that doesn't really explain it too much, but it's basically like a way of creating, autonomous contracts that have some pre-programmed logic, and that logic can be adapted to basically, you know, create any kind of financial instrument. And then you basically have this, credit-based mechanism of linking, people to make, to maintain the solvency of those contracts, right? So like if the contracts are, net creating money for traders, then like that has to come from somewhere. And it's basically coming from, collateral that's staked to it. So if I stake ETH to a perps market and, perps market makes money, well, that's great. Now I've transferred money from the users in the form of fees, mostly fees, let's say, to the stakers through this credit-based mechanism, which I think is novel and interesting, and a lot more. It's a very capital efficient way to do it, right? Because like I can take ETH that I have and I can indirectly use it to provide liquidity and earn yield on it from any combination of a bunch that I want of a bunch of different markets or instruments, in exchange for the risk I'm taking, obviously, in underwriting these markets. So if I had to put it in one phrase, I would say like it's a generalized credit-based derivatives liquidity protocol, which is like a lot of like mustardy jargon, but like that's probably the best way to describe it.
Yeah, and
I-
we'll go ahead, Mac.
I was just going to say, I saw a great description of it on the Synthetix Twitter by Adam Cochran. Shout out to Adam Cochran. And he basically called it the WordPress of derivatives. And for people who don't know, WordPress it's basically what most of the websites on the internet are made from. So again, getting back to this theme of this DeFi infrastructure. So I don't know if you guys would agree with that description, but I found that to be helpful.
Yeah, absolutely. Like we love that description, and like that is a really good way to think about it for people who are familiar with WordPress.
Yeah, I know we've got a couple competing community, views on what that should be. Should it be the Shopify, of derivatives? Should it be the WordPress? There's always a little bit of fun community chatter on that side of things.
100%. And maybe we can even let the audience decide based on like what it unlocks. So if you had to just quickly touch on what does it mean for like users as a group and what does it mean for developers, right? So I think it means completely different things for both parties, but yeah, just walk us through like what you think.
Yeah, I would just quickly come in and say as you said, there's like these two groups of stakeholders that are like, impacted by Synthetix V3 and in very different ways. On the developer side, it kind of requires a little bit of context as to how the system works right now. So pretty much like some of the products that Synthetix has built up to this point, like let's say perpetual futures, right? Like that has to go through the governance process to actually like exist and to like receive liquidity from this one large pool of liquidity. Now, how that changes in the future with Synthetix V3 and this like phased rollout and so on is that people are going to be able to build market logic, and market logic in this case is like the logic behind how spot assets are priced or how perpetual futures are priced or so on and so forth. People are able to build this logic themselves, then go a step further. They're able to say, hey, we want to support X asset within this logic, so we want to be able to support, I'm going to say an example, we want to be able to support Ethereum within the perpetual futures, market trading logic. And then they can say, okay, now I'm going to incentivize people with my new protocol token or just with, a very favorable fee share of the trading fees that go on within this market. See, the key difference here is that I didn't mention anything about synthetic governance, because Synthetix governance isn't necessary in this Synthetix V3 system to actually have these new markets blossom and grow and and be created and so on, right? People can come in and create these markets by themselves, incentivize liquidity growth, within their market by themselves, and so on. Now, what that opens up for stakers is stakers have this deeper level of control of their liquidity and their, and this collateral, right? Because right now, how the system works is when you stake, your debt is exposed to the entire debt pool and all the things within that debt pool. In the future, you could still be exposed to like this, like a Spartan Council, fund, which is thought of as this like V2X style, debt pool that tries to promote liquidity, in various products. But if you don't want to do that, and maybe you just want to be exposed to perpetual futures, you can decide your level, or where your debt is actually being placed within the system. And that's very important, right? It kind of allows you to bring in users that might not want to be exposed to every new asset or every new product. And then it lets these developers and products and protocols and everything build without having to go through the governance process to change parameters and to change logic and so on. That's a very like kind of broad strokes vision of it all. But yeah, Afif, do you have anything there that you want to toss in?
No, I think you covered it all pretty well.
Awesome.
Awesome. Yeah, no, that was really great. And we'll probably have like information regarding Synthetix V3 as well. I mean, you guys are going to be talking about it as you get closer to your guys' launch for it. But I always found it really fascinating that there are always these really, really intricate concepts in DeFi and the space in general. But the developers really need to figure out how to kind of come together with the idea, right? So like education is tough, right? So I spoke to a couple of people, and whenever you speak to like new devs that are really eager to build in the space, it's not like everybody kind of knows all these high level concepts of like, okay, I know convex optimization, or I know exactly how derivatives operate on chain. So how do you guys plan to do some of that educating so that developers understand how to contribute on top of the Synthetix stack? And I think you guys have done it well, but what sort of worked for you guys, and what can people learn from that?
Yeah, I mean, I would say within the Synthetix V3 system, just to start off with, the system becomes I'm going to say like a lot easier to understand. And as Afif said in the beginning of this call, the standards of DeFi that are standards now that weren't standards when Synthetix was built are adopted, and that side really helps the developer experience. But going further in terms of like developer education and so on, I know there's been a lot of work that's been done from Noah and other members of the core contributors to build out this like really expansive technical docs on integrating with Synthetix and that side of things. But I know there's CCs and community members that are talking about potentially doing things like hackathons and incentivized building of markets within V3, and incentivized building of new assets and market logic and so on, right? So there's these many possibilities, and then the next side of it comes in with incentives. And I know that's something the Synthetix community is discussing even right now. I mean, if you went into some of the governance channels, you would see people chatting about like, hey, we should potentially add on, maybe a basis point onto certain trades and distribute that to, the developers that are, integrating with Synthetix to, incentivize them long term. And I think there's a lot of, you could probably say like competing visions or like, ways to actually incentivize them. But the educational side, yeah, there's a ton of thoughts there. Not really a ton of info that has been put out yet, as it's still, being drawn out in how that will be released. But yeah, I mean, up to now, it's worked pretty good in terms of coordinating with developers and setting up these sorts of basic incentive structures to keep them around and to keep them supported and help with marketing and and so on and so forth. But yeah, I mean, kind of like yet again, like a little bit of a broad vision, from myself on this developer education side of things. But there's a lot of thoughts and a lot of ideas, and these ideas will definitely be executed on in due time.
Yeah, 100%. And I guess like for the developers out there, if you guys feel daunted by ideas that you want to build, the beauty of DeFi and crypto in general is that most of these communities are online. They're on Discord. You can chat with the team, you can chat with the community. So definitely go check them out, see if there's any ideas that they're looking for people to build. And a lot of that guidance can come directly from the team or contributors of the protocol. So yeah, I wanted to end with a quick maybe look or alpha leak into the future of Synthetix. We're at about time right now, but if you guys had to maybe say a couple of things about the future roadmap about Synthetix, I know we talked about V3. Is there anything that you could leave the audience with?
I mean, I would just say like, you know, keep an eye, like a big part of V3 is like building a tool that is kind of like hyper efficient at, you know, organizing a community. And so like I would say, you know, stop by the Synthetix Discord, join the conversation around V3. It's a really exciting time to participate in the governance and the direction of the protocol. And then once V3 is out there itself, you know, it's kind of a really exciting time to have, you know, complex incentive structures that, you know, that get people to come in and experiment and try different things, and that are, you know, I think very aligned with the ethos of DeFi. And it's just it's a really great, you know, community to participate in. And so like, I'll just, this is my plug for the community.
Yeah, I would definitely echo the things that Afif says. Anything that you could think of as like alpha, we've definitely like discussed, because it's so out in the open with the community and people discuss it, you know, so openly, you know, within the next Discord and, you know, on Twitter and so on. So yeah, I would highly recommend that people join the conversation on Discord. You know, the visions of the community directly shape the way that the protocol will move into the future, and you know, that's one of the most, you know, important parts of DeFi. I would also take this time to plug some of the integrators that rely on Synthetix liquidity, and I would tell everyone to check those out as well. You know, they're doing amazing things on Optimism, you know, and they're empowering this, you know, this really decentralized trader that is super important. So yeah, I would highly recommend checking out, you know, the likes of, you know, Quenta for, you know, spot and futures trading, you know, Decentrix for, you know, futures trading as well, Lyra for options, Polynomial for, you know, automated option vaults, you know, and there's a lot more, you know, protocols that have either spun out of Synthetix or, you know, are part of this, like what we like to refer to as this greater Synthetix ecosystem. I would just do a quick plug for them as well. I would check out the whole Synthetix ecosystem. There's a lot to learn, but it's, you know, very interesting, very rewarding.
Yeah, 100%. There you have it. The alpha leak is that all the information is free and transparent. So definitely go check out their communities. You can pretty much gain information into anything. So yeah, I had a great time talking with you guys today. I'm gonna let Matt take it away and just kind of give closing thoughts. But yeah, awesome conversation, guys.
Yeah.
Thank you, Smith.
Oh, sorry.
No, you're good. I just wanted to reiterate what Smith said earlier, which is that there is a lot to sink your teeth in here. I feel like we've just barely scratched the surface. So if this interests you at all, you know, check out Synthetix and their various channels. I think a good entry point would probably be the Twitter, Synthetix_IO. That's SYNTHETIX_IO, or Synthetix, is it Synthetix.io is also the website. So I think those would be good entry points. And as Matt, I believe, mentioned, Discord as well. I know that you have a very active community on Discord. Is there anywhere else you'd like to direct the listeners?
That's definitely where I'd direct the listeners at first. On Discord, I always tell people to check out like the Start Here channel, which kind of describes, you know, kind of gives you like some really helpful links. The Synthetix bio also has a link tree that you can check out for some of those helpful links as well. The bio on Twitter. So yeah, there's a bunch of places to find information. And if you're confused at all on even where to find that information, you can definitely head to the Discord and, you know, ask questions there, or, you know, even add us on Twitter. I'm very active on Twitter, and I'll definitely make sure to respond.
Awesome. Yeah. And this episode will be available for replay on Twitter for a month. And then it'll also be uploaded to your favorite podcasting platforms of choice. We just got the first 12 episodes of OP Radio uploaded. So they're available to listen on YouTube, Spotify, Apple, Google. So watch out for that as well. Cool, guys. With that, I think we'll wrap it up. Thank you so much, Smith, for leading this conversation. And thank you, Matt and Afif, for joining us. Hope you guys have a great rest of your day. We'll see y'all on the internet. Stay optimistic, everybody.
Thanks a lot, everyone.
Thanks, everyone.
Awesome, guys. You have a good one. Thanks for having us. Bye-bye.